Hello everybody, it is Toni Turner and welcome to the market now as of Friday, October 11th at about 11:30 a.m. Eastern. Well, Wall Street is rising for the third straight session so far today as investors expect top-level trade talks between the United States and China to result in a partial trade deal and delay planned U.S. tariff increases. The White House today said the trade negotiations were going well, and President Trump would meet with the Chinese Vice Premier later in the day. The top-level discussions enter their second day today. And on that news, hopefully good, we will go on to three charts that could give some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500, SPDR, symbol SPY. This is the exchange-traded fund or tracking stock that closely follows our S&P 500 benchmark index. Now, when I captured this chart today, the SPY was trading at $298.13, or about $29.81 on the S&P 500 itself. We had a great gap up this morning, as you can see. The SPY obviously made it over the green line, the 50-day moving average, which is where it closed yesterday. Thursday, it closed at 293.37. Today, it opened up, and again, when I captured the chart, it's trading at $298.13. So we got a great gap up here. Now let's hope it can hold. As you know, the SPY has been trading in a range here, swiveling from about 285 and about 302 up at the highs here, the all-time high. It's been trading in a range here for quite some time. And everybody is like, okay, so when does this end? You can also see that it forms a wedge here. You can see the lower line, the blue channel line, coming up underneath price. You can see how price also came up to this 302 level, stopped cold, fell back down, as we know, in August, traded between basically between the 200 and 50-day moving average, then moved back up to the prior highs, could not go above them, pulled back again on more trade talk news, and is now, of course, today, as I said, gapped up above the 50-day and the red line, the 20-day moving average. Now, hope is not a strategy, but it would be nice if the SPY here could keep on going up. It'd be really nice, super nice, if it could move up and close and make a higher high above 302 and change and keep on moving higher from there. We will have a little bit of challenges going on here. Of course, we have monetary policy, as well as the trade talks. We have monetary policy going on in our own country. We do have third quarter earnings season starting this coming Tuesday with many of the financial institutions announcing, and I'll tell you who they are a little later on. So again, let's just fingers crossed the SPY stays above, at least above the 50-day moving average. Who knows if it has to come back in and fill this gap, maybe on earnings announcements, maybe not. Maybe it can keep on going. So next week, with the trade talks, monetary policy, and so forth, it should be an interesting week. So keep your seatbelts fastened, your risk management in place, and let's enjoy the ride. Okay, now let's go on to our next chart today. This is a chart of the iShares Russell 2000 ETF, the IWM. As I've told you before, we many times follow the IWM as it can act as a leading indicator for the broader market. Now, the IWM is made up of the Russell 2000 small cap index, and they kind of have their own personality. When I captured this chart today, the IWM was trading. It made it back up here to $151.87. I was a little worried this past week as it was down here fooling around near its lows, its prior lows from August at about 144. And as I said, in the last week, it's been fooling around here, consolidating a little higher high, higher low, I should say, though. So that's nice. but it's been consolidating in a wishy-washy kind of zone here down just above 145, and my breath was held here saying, you know, please stay above 145, especially 144. So today it was great when the IWM gapped up this morning, opened around 149, and has kept on moving higher up to now. It's moved above the 50-day, and now it's found resistance at the 200-day moving average, coming in at $151.92, and it's also found some resistance here at the 20-day moving average, coming in at $151.71. So this 151 level has provided support before and resistance now, and resistance before. We can see the resistance back in August, and we can see how it was actually support back in June, and if we just want to keep right on drawing this line, we can find more support and so forth. So it's either been one or the other. A lot of that's having to do with the 200-day moving average kind of been at this point too for a while. So now this is where the rubber meets the road. This is where we see if the IWM in the coming week can move up above the 200-day and the 50-day moving average. It's already above it, but the 200-day, that can be quite the ceiling when it wants to be. Although, if you can see here, the 200-day is actually moving a little higher right now, so that should provide less resistance. So the IWM in the coming week needs to move up and over 152, and then with all things being wonderful, it needs to start back up and get up to this prior channel line coming down here at 158. And if it can move above that and start back up for 161, where it was back here in April, that would be a very, very positive sign for the market. We know the IWM has been the crankiest of all the market indexes. It's been trading below its 50 and 200-day moving average for quite some time. So this would be a very encouraging move if the IWM can move higher and stay higher. So I'm going to keep an eye, real close eye on the IWM in the coming week. As always, it may give us clues to the movements in the market as well. Our final chart today is the Global X Robotics and Artificial Intelligence ETF, the BOTZ. I was looking for an ETF here that would have some resistance underneath the, support underneath the gap up. And I found that with the BOTZ today. I don't think robots are going away anytime soon, and certainly AI, or artificial intelligence, is growing in leaps and bounds. So that's why I wanted to look at this particular ETF. This has companies in it that stand to benefit from utilization of robotics, and artificial intelligence, including industrial robotics and automation, non-industrial robotics, and autonomous vehicles. Now, some of the top components in this include NVIDIA, and it's global, NVIDIA, Mitsubishi, Keyence, and Intuitive Surgical. Now, when I captured this chart today, the BOTZ was trading at $19.88. It opened at the first of the year here, back in January. It opened on the 2nd of January at $16.57. And then, as you can see, it made quite the nice move up to this April high up here, about $22. Then it fell down, gradually fell down to August lows at about $22. I'm sorry, at about 18 cents. So then it's moved up from this consolidation that everybody experienced in August, although this was a pretty low one. It did move up. Now it's back above the 50-day moving average. It's trading above, again, the 50-day moving average, moving higher today. We can see it's trading in a wedge here, or a triangle. This higher low here is very encouraging. So in the coming week, if the market remains positive and the BOTZ remains positive, I may add shares of the BOTZ to my trading portfolio. It's sitting on top of its 200-day moving average right now, and of course, as I said, it is above the 50-day moving average. If I enter shares of the BOTZ, I'm gonna pay attention to the fact that we've got a trend line coming down overhead and certainly resistance up here. So I will scale in. I won't buy all my shares at once. So I may add shares in the coming week. If it moves higher, my initial stop will be a close below the 50-day moving average, which is now coming in at $19.23. And of course, if it continues higher, and it can make it up over, say, 2050, 2054, then I may add shares to that position if it can keep on gradually moving higher. So that's my strategy here with BOTZ, to start low and slow and then gradually add to it if it's successful. Because, you know, as we all know, in earnings season, things can get a little exciting, and especially adding the trade tariffs in. So low and slow, low share size, moving slowly is my motto right now. And now for upcoming economic reports, we're going to go into that and tell you a little about earnings. But first, I want to alert you to an exciting opportunity. And with most online brokers taking their commissions to zero right now, this is the best time to check out my online training, How to Swing Trade Successfully. In this program, you'll discover the steps I take and the setup I use to make highly profitable swing trades. You'll learn the setup I use for my own trades, as well as the setup we've used successfully in Toni's Market Club for the past 11 years. This strategy is easy to learn, and you'll discover how to take the biggest profits out of upswings safely and successfully. So don't miss out. Check out How to Swing Trade Successfully at the link on your screen or the button below, and get this exciting new online program where you're going to learn to take the biggest profits out of upswings safely and easily. You're going to know exactly when to buy and when to sell, and you're going to know how to find the best stocks and ETFs to trade. And again, this exciting program is available for the next few days only at a special 20% discount now. So please check it out. I think you'll be really glad you did, especially now, again, with the online brokers charging zero commissions. This makes swing trading a lot more, actually makes it a lot more profitable. And now for the upcoming week's economic reports. Not much going on Monday, economic report-wise. On Tuesday, we have the Empire State Manufacturing, and earnings season starts with earnings from many financial institutions, including Schwab, Citigroup, Goldman Sachs, JP Morgan, and Wells Fargo. On Wednesday, of course, we're going to have more earnings every single day from now on for the next 3 weeks. Economic-wise, we have retail sales, crude inventories, our usual crude inventories, and the Fed's Beige Book. On Thursday, we'll have building permits, housing starts, and our usual jobless claims, plus the Philadelphia Fed and our usual nat gas inventories. On Friday, we will have the University of Michigan Sentiment Report. Again, don't miss out on this limited time offer to grab our popular training, How to Swing Trade Successfully, at a 20% discount. With this discount and free commissions at most online brokers, this is really the perfect time. But hurry, this offer is only going to be good for a few more days. Just click on the button below for more info. And until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.